plans for maybe higher interest rates. So money is going to be a little bit harder to come by, or this new corona variant may scuffle all of that, and we will have even more money printing next year.
And joining us next is Alex Mashinsky, CEO of Celsius Network. Alex and I will be discussing the outlook on cryptocurrencies, gold, the US dollar, and the state of the US economy in 2022 and beyond. Alex, of course, is well known in the crypto space, but he had a very long career as a tech entrepreneur, being one of the founders and creators of VoIP technology, voice over IP. So we'll also be discussing the state of technological innovations around the world. Alex, it's good to see you again. Thank you for joining us.
Hi, David. Great to be with you.
Great to be with you too. Last time I spoke to you was not too long ago. We were speaking in person in Miami at the Decentral DeFi conference. This time we are not at a conference, but we'll be talking about your outlook for the following year. So I'll start by asking you what you think are the major investment themes of 2022.
Yeah, so obviously we're seeing plans for tapering. It's not tapering yet, but just plans for tapering. Also plans for maybe higher interest rates. So money is going to be a little bit harder to come by, or this new corona variant may scuffle all of that, and we will have even more money printing next year. So really, we are at a cross in the road, and no one really knows which way it's going to go, right? So the US has been very accommodating, right? Which helped with our gross domestic product. And it obviously helped the crypto markets as well. Gold is the only kind of asset class that's been going sideways, waiting for some resolution here. So I think for next year, we really have to wait and see what happens with COVID, see what happens with the consumer, what happens with the Fed, and what Treasury / the political machine is going to do out of Washington.
So Alex, some economists have posited that the higher asset prices we've seen in 2020 and 2021 were a result of higher speculation activity from excess liquidity by the Fed. If you're saying that next year, due to either tapering or interest rate hikes or both, we could have less liquidity in the system, does that not imply that we'll have less speculative activity as well?
It may, really. It depends on what's going to happen to tapering, what's going to happen to money printing. And, I think on the early signs of a slowdown, early signs of shutdown or slowdown economic activity, I think the Fed is going to reverse course. And then risk assets are going to do well again. But if we're seeing inflation continue to rise, we're seeing the Fed really locking horns with inflation, trying to put it back in the Pandora box. And then I think we're going to see asset classes, including Bitcoin and gold, actually take a hit first, and then they may recover and go higher. But I think everything is going to take a hit first if tapering and the yield prices or the interest rates are going to rise. So that's why I'm saying you have to wait for at least a few more months to see which way the economy is going. So the labor monthly numbers are very important. Inflation numbers are very important. And, money printing, like you said, the Fed printed 40% of all the dollars that existed in the last 18 months. The stock market is up 40% in the last 18 months. So those numbers match for a reason. And because most of that liquidity is coming from the Fed and Treasury into financial markets and not necessarily into Main Street.
So would you characterize next year's theme as more risk on, a continuation of risk on activity, or more risk off?
I think we will have volatility. And because of volatility, if there's a lot of volatility, because, for example, inflation is out of control, double digits, then gold and Bitcoin are going to become even bigger, safe assets.
Okay.
But if we have single-digit inflation and the Fed is fighting it, then all assets are actually going to lose value because everybody is going to be hurting. And the opposite, if the Fed decides that inflation is not an issue and they can accommodate longer, then all asset prices are going to go up. So we have several scenarios here, and we have to watch very carefully what happens with each print each month and make decisions based on that.
To your point about the US dollar, more dollars were printed last year than at any other time in history. Were you surprised at how strong the dollar has been maintained despite higher inflation, despite more money printing, and despite monetary stimulus?
I wasn't surprised because the dollar is the reserve currency of the world, and it is the best looking house in a pretty bad neighborhood, right? So if you have Turkish lira, the dollar looks amazing. If you live in Venezuela and Argentina or any of these other countries that are struggling with their local currency, converting your assets into dollars looks like a smart move. So because of that, because of the risk, increase in risk in many fiat currencies, you're seeing mass migration to the dollar. And because of that, the dollar is strengthening, despite the fact that the United States is printing trillions of dollars. And the secret to the U.S. Power, the U.S. success, is the fact that we can continue printing dollars and not have the dollar collapse, because the rest of the world, the United States is 5% of the population, but about 85% of all the transactions in the world. That is really the secret to the power of the US dollar. And the military is here to protect, the US military is here to protect the US dollar. Don't get confused with the US military protecting the US population.
Wow, can you expand on that? So they're more interested in protecting, well, that goes without saying. That kind of applies to any country, does not?
Well, if you look at the deployment of where U.S. troops and Air Force carriers and so on are deployed, they're deployed, for example, to protect the oil region. They're deployed to protect Taiwan, places like that are economically important for maintaining the U.S. dollar as the reserve currency, the petrodollar. International commerce and so on. So again, you're not seeing these troops being deployed to protect our border with Mexico or border with Canada, right? So I think most of the U.S. might is here to protect the economic machine. It's a good thing. I'm not saying it's a bad thing. I'm just explaining that it's here to protect the economic machine, where the United States gets a free ride from the fact that most of the world is using dollars to transact between all the different countries.